What up, Hyperchange? Welcome to another episode. Today we're talking about Twitter and the company's Q4 2018 earnings report that was just reported. I listened to the conference call. This is a very interesting year for Twitter. Record revenue and record profits for the full year as well as Q4. I think they're sort of out of the woods in the turnaround. I think this is a really interesting company that I've been following closely, and I think they're sort of at this breakout moment, and this was a huge quarter for Twitter. The market wasn't too pumped about it, but that's another story. So we're going to go through all the numbers right now. Let's get right into it. So this is Twitter's slide presentation they put out every single quarter. It's awesome. It's on their IR website. I'll put a link in the description. And so the first slide here is monetizable daily active usage. And this might catch you by surprise because Twitter for years has been reporting MAUs, monthly active users, as its main business metric. I've been annoying them on Hyperchange to switch to DAUs constantly, but they've never done it. But now they finally have. And so they're, instead of disclosing how many people are logging in each month, they're disclosing how many people are logging in each day on average, and not just how many people are logging in each day, but how many people that can be shown ads. You have to be able to be shown ads, hence the term monetizable daily active usage. In Q4 2018, 126 million daily active users. Now, you remember we just did the Snapchat earnings video. Snapchat has 186 million daily active users. I don't know if they're holding themselves to the same standard as Twitter is, but that is the data. And so what is interesting about Twitter's user base is it's very, very international. 99 million international DAUs versus 27 million in the US. The overall DAUs growing about 9%. So pretty healthy and consistent growth for Twitter's core daily user base, growing at about 10% in both US and abroad. And then if we scroll down, you can see the monthly active users, and this is the number they're stopping to report, and it was looking a lot worse. It's been going down 9 million worldwide year over year to 321 million. And part of the reason I think the MAUs are going down, this is just a random theory I have, is that Twitter's been slowly deleting fake and scam bot accounts. And there's also an interesting tidbit on the Jack Dorsey Joe Rogan podcast, which I want to make a whole nother episode about. Twitter's really working on not focusing on trying how to get rid of the bots and remove bots and identify bots, because that's so difficult and the bots are getting so advanced. What they really want to do as the future is to verify humans and make sure that is the power of the authentication, is instead of going one way and verifying bots, they'd rather just verify humans. And so when you're on Twitter, you can know for sure that it's a human that you're talking to. I think that's a really cool feature. But anyway, back to this monthly active usage slide. My theory is they've been slowly and steadily deleting bot accounts, and that's part of the reason why the MAUs looks bad. Moving on to revenue. Twitter's revenue is growing 24%. So that shows you why the daily active user number is more important to the core business than the MAU, because that core usage of daily active users is who you can show ads to, and that's growing, and that's why the revenue opportunities are growing. So Twitter, 24% year-over-year revenue growth, 44% of their revenue is international. That top blue line is data licensing. So Twitter, mostly an advertising business, but they do have that, about 10-15% of their business is data licensing, which has been growing consistently as well, 117 million in the quarter. If we look at advertising revenue by geography, there you go, 44% international, pretty even 50-50 split, which is interesting because going back to that usage chart, despite having, only a quarter of its user base in the US or less, that's why they're generating half of their revenue. Switching over to hypercharts, we can see their Twitter's income statement, and this is really just the best way of depicting the turnaround. If we remove gross profit, just to focus in on revenue and operating income here, and just as a side note, we've decided to switch hypercharts to display operating income instead of net income on this chart. You can still get net income down here, but that's just to let you know. Anyway, so Twitter has really gone on this huge inflection point. They've been able to grow revenue consistently, streamline their operating structure, get way tighter in terms of cutting expenses, and that has resulted in skyrocketing operating income. This is a company that was losing money forever and has now posted 207 million in profit operating income in the quarter, up from 110 million in Q4 2017. This is seasonally their strongest quarter, so almost 100% growth. If we look at Twitter on an annual basis, I think this also really just shows, the transformation Twitter's undergone. They declined gross profit and revenue in 2017, but started to make a little bit of money. And then in 2018 was the year where they really, put the foot on the gas in terms of growth again. And we saw record revenue of over 3 billion. And for the full year, operating income of 454 million. So a great year for Twitter. Their profitability is really shining through. And part of the reason is that if we go to their operating expenses, you can see how this has been way flatter. They've been doing a lot of work to sort of reduce these operating expenses throughout 2017, specifically specifically things like, R&D. My guess is they had a lot of unnecessary projects that they were just cutting, or it seems like that's what Jack Dorsey was implying on the Joe Rogan podcast. And if you look at their R&D expenses, those have been declining significantly in absolute terms and even more in terms of percentage of revenues. Even sales and marketing expenses have been sort of pretty flat. And when you take into account that the revenue has been growing in the mid 20% range, I think this is really impressive control of the operating expense growth. And this chart showing the percentage of revenue from these operating expenses really just goes to show you how much work Jack Dorsey and Twitter have done turning around this company. And what's that resulted in is tremendous free cash flow. I mean, Twitter is pumping out, if we just look at the free cash flow, OpEx minus CapEx, hundreds of millions per quarter in free cash flow now. So Twitter has been a cash machine. And for that reason, their cash and cash equivalents on their balance sheet are piling up to over $6 billion in cash for Twitter. So Twitter has a lot of firepower to make a big acquisition. That's kind of something I think makes a lot more sense, or is intriguing to me, given just seeing how much cash they're piling up. Twitter has become all of a sudden this incredibly profitable company. And one of the huge reasons why, if we go to the shareholder letter, you can look at Twitter's stock-based compensation. So this has been a huge, sort of pain point annoyance for people following Twitter, is they're paying so much money in stock comp to their employees that it's A, diluting, and B, it's making them not profitable. So they actually, despite growing revenue 25%, they cut their stock comp huge from $434 million to $326 million. So that was super impressive. And I think that's sort of a sign of the company growing up. And Square, Jack Dorsey's other company, actually does a lot of stock-based comp too, so I wonder if they're going to follow in Twitter's footsteps and reduce that going forward. Anyway, so that is the financial wrap-up of Twitter. We saw really impressive revenue growth in all categories for Twitter: international, domestic, data licensing, advertising. Daily active users is now the main metric going forward, plus 9%. So, the market is a little spooked by Twitter. They don't know what to make of it, but I think Twitter as a product, I love Twitter. I go on Twitter all the time. You guys should all follow me at GFilchi. And, I love the product. I think I've noticed since Jack Dorsey's taken over, all these subtle changes like original tweeter have been added to conversations, which I think make huge differences in improving engagement. And another thing Jack Dorsey mentioned on the conference call that I thought was super interesting is his focus on machine learning. The way that Twitter's been able to apply deep learning to improve the company. What I think is going on at Twitter, why they're becoming so much more profitable, is they're basically automating with code and software all of these tasks that coders used to do, and applying these deep learning algorithms to almost every facet of the business model is making this into an incredibly lean and profitable operation. So this is really an artificial intelligence company in a lot of ways. And Twitter's mission of, empowering and facilitating the global conversation, connecting us all, being that pulse on who thinks what about what's happening in the world, I think is an amazing product. They're the best in the world at it. I don't think this is going anywhere. I think the president tweets, celebrity tweet, everybody, journalists tweet. I think Twitter is essentially a hugely important utility for our society today. And I only see it getting more and more relevant as we get more and more connected in the digital world. So I don't see Twitter going away. It's valued at around 20 or 25 billion. If we assume Twitter's worth 25 billion divided by 454 million operating income, we're looking at about a 55 times price EBIT multiple based on 2018. So I don't know. I think 55 times earnings, it seems very expensive, but I think Twitter's earnings power is very understated based on their financials today. If they can improve monetization, if they can improve ads, if they can keep growing, if they can keep using machine learning to streamline their model, I think they have a lot of room to grow earnings. Another thing they mentioned in the letter is a huge focus on live and building live content and partnerships. That's something that seems to kind of have been on the back burner, not getting much attention for Twitter anymore, but I personally noticed a ton of my favorite people I follow, like Jason Calacanis, Kara Swisher, Anthony Pompliano, are all going live on Twitter now. A ton of exciting stuff for Twitter. I'm personally more bullish on the company than ever. Actually, Jack Dorsey's podcast with Joe Rogan that just came out, I think is incredible if you're into Twitter from a financial business perspective. So I'll put a link in the description. I would all recommend watching that as well. Anyway, this is Hyperchange. That's my recap of Twitter's Q4 2018 earnings. The company is record revenue, record profits. They're growing their core daily active users again. I think the future for Twitter is brighter than ever for this culturally, iconic platform. I'm a huge believer in Jack Dorsey. I'm a huge believer in the mission of Twitter. I'm very, very bullish on this company, even though it looks kind of expensive from a price earnings ratio. Anyway, that's my recap. This is Hyperchange. Huge shout out to our Patreon supporters, producers, fun in the channel. I'll see you guys next time. Peace.